Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. There's a lot happening that we're going to cover today. We're going to cover off the news, US and China potentially resetting trade relations. We're going to talk about two companies that are mirroring Berkshire Hathaway's strategy. They're copying from Warren Buffett's playbook. How well are they copying? We're going to have a look. And then we're going to close out with the antithesis of Warren Buffett's playbook. Your effort to turn $500 into $5,000.
I know. Can't wait for that.
Yeah. But before we do, we want to shout out our Equity Mates TikTok account, because we know not everyone's on TikTok, but we are working to grow it, and we have big plans. Bryce wants to start being an influencer, getting some of that influencer swag.
No, I don't even have TikTok on my phone.
Yes, I'm doing most of the heavy lifting on TikTok, we should say. But if you are on TikTok, come and give us a follow. We're trying a bunch of stuff out. We're posting some stuff there that we're not going to be posting anywhere else as we experiment and learn. Will Bryce be dancing? You're going to have to go and find out. So, Equity Mates TikTok, give it a follow.
The only TikTok I've ever done, Ren, was during COVID. It was called Homicide Detective. And it was a bird's eye view of me eating hummus.
Yes.
5 videos, 11 followers.
We actually revisited that account recently. Bryce might think that's the only TikTok he's done, but I can guarantee you there's a lot more Bryce on the Equity Mates TikTok.
Go and check it out.
And you can go and search for Homicide Detective as well.
Please don't.
News and markets.
So today we're going to look at the US and China tariff reset. There's news that has come out around the focus on pharmaceuticals from Donald Trump, and also a stock that I pitched a couple of weeks ago, maybe last week, when I can't remember, we do so much content. It has reported earnings, so we'll give an update on that.
Nice. So let's start with the US and China reset. This has been the big news, but just to recap, the US and China met in Geneva, trade representatives from both countries. They agreed on a 90-day tariff reduction. So not a complete pause on tariffs, but the US cut tariffs from 145% to 30% on Chinese imports, and China cut from 125% to 10% on US imports. So they both cut their tariff rates by 115%. Importantly, China also agreed to pause a lot of their non-tariff trade sanctions. So that's good news.
Great news.
The market certainly thought it was good news. The day after it was announced, the S&P 500 jumped more than 3%. The NASDAQ jumped 4%. The US markets were then actually up from Liberation Day.
Trump will be loving that.
Yeah. Now, I think we can unpack some of the details, but I guess at a high level, that's the news.
That's the news. Looking back on it, it was the most obvious trade you could have made.
Oh, you see, you said this before we started recording, and I said, just wait until we've started recording. Because
it couldn't there was no way, in my opinion, that they were leaving Geneva with a worse outcome.
See, I don't think that's true. Like, couldn't you have seen a world where, like,
I think Trump realized that they couldn't have kept going. This is a massive walk back from the United States.
Yeah.
So I think what has happened is no one was expecting it to be this big, like 115% cut from either side. Like it couldn't really be much better for both sides. But I think that the trade was there, that positive news was going to come out of it.
Yeah, I reckon this is a watch, because it's like the easy thing in negotiations is to agree to the initial ceasefire or the initial pause. And it's like, okay, let's give ourselves 90 days to negotiate. The hard thing is then you actually have to confront the underlying issues that led to the conflict in the first place. And in this case, if if part of the US's negotiations over these 90 days is to try and close the trade deficit they have with China, like that's
impossible though.
Well, I mean, like,
I think Trump, I think they're realizing that can't be done.
Well, I just, for me, this is a watch. Markets are forward looking, and I find it interesting just like how positive they are around these 90 days when we know there's a lot of underlying economic data that's showing that like global trade is really starting to dry up. And beyond this 90 days, there's still, I think, a lot of uncertainty.
Yeah, I don't know. Trump seems quite emotional, and he's going to see the markets ripping after this, and he's going to feel quite good about himself.
Yeah.
So I think we've got two things to watch out for then. We've got the July 8 date, which was the original 90-day pause from the liberation.
Yes,
which is global.
Global.
And now we have a 90-day tariff reduction date, so 3 months from sort of May 13.
Yeah.
For US, China specifically.
Now, one thing that does support your side of the case and is against my own argument that beyond the 90 days, I think there's still some risk and maybe markets are being a little bit sanguine, a bit calm in the face of risk. When Trump was asked whether tariffs could return to 145% on China if no deal is reached, here's what he said, quote, "No, you know at 145% you're really decoupling because nobody's going to buy." Which, yes, we all know that. We thought that was the point. We thought you were putting 145% on because
So
you were
no one
trying
buy.
to decouple Western supply chains from China.
Yeah.
But it seems now that that is something that you don't want to do.
Yeah.
So if things aren't going to go back to 145%, yeah, you can see that there's an intention to get some concessions and make some form of a deal.
Or they just leave it at what it is, 30 and 10, get on with it.
But let's move on because that's not the only trade story that we need to cover. Trump called out another trading partner who he said, quote, "in many ways is nastier than China."
The pharmaceutical companies.
Well, no, he actually said the European Union.
Oh, there you go.
Yeah. So, interpret that how you will. But yeah, it was in the context of talking about pharmaceutical companies. He was saying that the European Union extort drug makers, American drug makers, but pharmaceuticals is now a target for Trump.
Yes. So the White House have announced that there's an executive order that Trump has signed aimed at lowering drug prices by forcing pharmaceutical companies to match those paid in other countries. This has been a bugbear of Trump for a while now. If they fail to comply within 6 months, America may impose import restrictions or cap prices.
Now, this is really interesting to me because this is like a pre-Trump thing. There's been this theory in health economics for a long time that the US subsidizes the rest of the world's drugs. Because if you think about, like in Australia, we have the Pharmaceutical Benefit Scheme, and there are similar schemes where governments either buy drugs at discounted prices or they cap prices or they negotiate directly with pharmaceutical companies for lower prices. But the US, on the other hand, don't, and they just pay exorbitant amounts of for everything. Trump said that this particular executive order was sparked by a conversation with a friend in London who paid $88 for GLP-1 drugs when in the US that same drug would cost like $1,500.
Yeah.
But this is a long-running gripe that Americans have. The thing that I find really interesting, though, is Trump, running as a Republican, is starting to come around to a lot of Democratic positions because capping prices on drugs, having Medicare and Medicaid negotiate prices directly with drug companies, all of that stuff has been a Democratic policy for about the last 10 years.
He's just a deal maker.
Well, I feel it's like he is unconstrained by traditional party politics. And like this is a big issue in America and it's interesting. So Trump's come around to it. He will get, you would think he would get support from Democrats and from certain Republicans for this policy around negotiating directly with drug companies and capping drug prices for Americans. But here is the thing. The stock market doesn't think it's going to happen. Despite the threat, despite the executive order, share prices of Merck, Pfizer, and Gilead all rose.
Love that.
Well, I don't love that.
Why?
Well, I mean, I think that capping drug prices is probably just a good policy outcome. I know we're not in America, but like...
Yeah, but I think history shows that it's going to be very hard to do.
Yeah. But do you love that?
I love that I'm a shareholder in one of the one of the companies, and it has responded with some green.
Which one are you a shareholder in?
Eli.
Oh, they also jumped?
Yeah.
Oh, okay.
Yeah. So, from that point of view, but yeah, I mean, objectively, yes. I think the policy outcome, if he can make it happen, is good.
Yeah.
Yeah. Of course.
So that's one to watch. Trump also said earlier this year, I'm not sure, so a lot of the US pharmaceutical companies moved their headquarters to Ireland, like Pfizer is the classic example for the lower tax rate there. Trump earlier this year said he would have put a 200% tariff on drug companies that did it if they tried to leave America. So I think pharmaceuticals has been in his focus for a while, and I think this will be an unfolding story to watch. So we'll keep watching it. But let's close out, Bryce, with a company that you pitched on Equity Mates, maybe a month ago?
Oh, not
few
even. A couple
weeks
of weeks.
ago?
I reckon even last week.
And if anything, it's confirmed the thesis that Bryce moves markets because things have happened since then.
Things have happened. So just to get anyone up to speed who's just joined us, the stock was TransMedics. The ticker is TMDX. It's a medical technology company that plays in the space of organ transplants. They've developed a portable device called the Organ Care System, which helps keep donated organs, hearts, lungs, livers, you name it, alive and working outside of the human body while they are transplanted for transplantation. So this is building on the existing way of cold storage, which is just keeping the organs on ice, allows the organs to stay alive and be usable for a lot longer. They also have a full logistics service, their own planes and teams to pick up organs and transplant them around the country. So that's what the company does.
Now, you presented this company on, I just had a look, on the 30th of April is the day the episode went out. Since then, it's up 29%.
Call me the Omaha of Darlinghurst. Oracle of
No, I will call you the Omaha of Darlinghurst.
Oracle of Darlinghurst.
Okay.
No, yes, it is up, but it's up for good reason, Ren. They have reported Q1 earnings.
Nice.
Revenue hit 143 million. That was up 48% year on year, beating expectations. Earnings per share was 70 cents. Smashing expectations of 29 cents, and the stock rose 21% on that news, has continued to rise since. But the good news as well is their forward guidance is great. They've lifted forward guidance revenue from 530 million to 565 million, which the market really loved. And they continue to expand operations within the US. So it's good. It's all good news for TransMedics.
Yeah, nice. Well, it's certainly going to be one to watch. And we are going to eagerly await your next stock picks.
I think importantly, this is what I've learned from experts as well, interviewing them, is the earnings cycle quarter on quarter, and you can really get in that loop of, obviously stock price follows earnings, and I think the last 3 of the past 4 quarters they've been beating and also increasing guidances. So it's a good indicator.
Yeah, it's a good indicator. Certainly one to watch. We'll be covering more of your stock picks later in this episode when we get the 500 to 5K update.
And just a reminder, if you're not subscribed to our daily newsletter, you'll find a link in the show notes. Every day, 6 a.m., we'll send you a dot point summary of the most important news headlines that are moving markets. There are 2 companies that have been quietly trying to replicate the superpowers behind Warren Buffett's Berkshire Hathaway. In this segment, we're going to run our eye over each of them to see how they measure up. Ren, what are they?
Yeah, well, let's start with Berkshire and unpack the superpowers behind Berkshire.
Okay.
So if I was to ask you what they are.
Obviously, the big man himself, Warren Buffett.
Yes. Hard to replicate that as a superpower.
Yes.
But if we say beyond Buffett, the superpower of Berkshire Hathaway?
His insurance float, or the insurance business.
Yeah, and explain that.
Berkshire Hathaway is one of the biggest insurers in the world. One of the advantages of that is the way that insurance businesses work. You get paid the premium, and then there's a gap between having to pay those premiums out.
Yeah.
So you're sitting on effectively a large pool of cash. That cash, he then goes and invests.
Yes, but buys private businesses, invests in the stock market while maintaining enough cash to pay out on any claims.
Yeah.
That's the superpower behind Berkshire. That's what gave Buffett the money he needed to invest so successfully.
Yeah.
And, every insurance company has a float. Every insurance company invests. None of them really do it as effectively as Buffett. A lot of them just buy a lot of, fixed income and more safe securities. But there are two companies, one in Canada, one in America, that are trying to really replicate the Buffett insurance float strategy. So we wanted to run an eye over two of these companies. The first one is Markel Group, New York Stock Exchange ticker MKL. And the second is Fairfax Financial Holdings. They're based in Canada. The ticker is FFH. And we should say, we're familiar with Markel.
We are familiar with Markel. So we went to the Berkshire Hathaway annual conference in 2022, 23, in Omaha, Nebraska. Awesome experience.
Which is good because you're the Omaha of Darling.
I'm the Omaha of Darling.
Which would make no sense if people are watching this segment in isolation.
True. The Berkshire AGM is on the Saturday, and then Sunday morning, Markel come in and do their own sort of AGM with a breakfast after a 5-kilometer fun run.
Yeah,
what was it before?
Berkshire do the 5K fun run, and then Markel have they put a brunch on, and then they do their AGM, really trying to align themselves with Berkshire shareholders. We went. It was not as interesting as the Berkshire one. But it wasn't bad.
Yeah, good event.
So I had a look at how Markel's gone since we saw their AGM in May 2023 when we were in Omaha. Up 39%.
Okay.
Not bad.
Solid. If we look at Berkshire, though, same period, May 2023 to now, it's up 75%.
Okay.
So
I did say trying to replicate. So I wanted to have a look a bit more at Markel and Fairfax and just sort of understand what's going on, given that Buffett is front of mind, given that he's retiring at the end of the year. So let's start with Markel, a little bit about the company. They've been around since the 1930s as an insurance company, but they really started this Berkshire Light strategy in the late 2000s. So they've been doing it for 20 years, call it. They have 3 business segments: insurance, investment, and their operating businesses, which is called ventures.
Okay.
Sound familiar?
Yeah.
So insurance, it's quite different to Berkshire. They're focused on really specialty lines like professional liability insurance, whereas Berkshire is much more mainstream with property and casualty. And then they have they're the massive reinsurance business where they offer insurance to insurance companies on their insurance policies. So that's insurance. Then there's ventures. Much like Berkshire, they're focused on buying boring, profitable businesses.
Nice.
Here's some examples.
Yeah.
2008, they bought Parkland Ventures, which make manufactured homes.
Okay.
2009, they bought Panel Specialist, which makes dorm room furniture.
Really? What's the difference between
just cheap,
really small
cheap stuff? I reckon. Yeah. 2009, they also bought Ellicott Dredgers, which makes dredging equipment. 2011, they bought Weldship, which makes specialty gas transportation and storage equipment. 2012, they bought Havco, which makes laminated wood flooring for dry van trailers, trucks, and containers.
Yeah.
So, just like
meat and potatoes.
Meat and potatoes businesses. Things that keep the economy moving, but just aren't considered sexy.
Yeah.
So that's their ventures, very similar to Berkshire.
And do you have any information on whether or not these have been successful, or these are just these are businesses they still haven't?
I'll get to that. I'll get to that. So then the third business segment is investment. So over the past 5 years, they've grown that from 7.6 billion to 11.8 billion. Not bad. Do you want to have a guess at what their biggest holding is?
In Berkshire.
In stocks, yeah. Berkshire.
Is it?
Yeah. 13% of their investment portfolio is in Berkshire. And then their other top holdings: Alphabet, Brookfield, Amazon, Deere, Home Depot, Visa, Apple.
Nice.
Big American companies. Well,
Solid.
Brookfield, Canadian, but the big boys. So growth between 2016 and 2024, their earnings are the compound annual growth rate of their earnings in the insurance business 9%, In the ventures business, so the companies they own wholly, 15%. And then their investment income has grown at 12% a year. So solid.
Pretty decent,
obviously not Berkshire numbers.
But like if you do that if you do that year on year, you're compounding pretty well.
That's compounding.
Yeah.
Now, one thing, as I was doing some research on them, they actually have an activist investor on their board, in their cap table, that's trying to split the company up. Okay. Which is the anti-Berkshire thesis. They think that the operating businesses would have more value, like they would fetch a higher multiple as a standalone business. Because if you look at their valuation, Markel's valuation trades on a 14 times price to earnings, but it has grown revenue at 15% a year over the past 10 years.
Okay.
So it's like it's pretty cheap multiple, growing at a decent clip. Obviously not growing as fast as Berkshire, but I find it interesting.
And so Berkshire is trading on a 13 times PE. What was that one? 14.
14.
So pretty similar.
So let's go north of the border and let's look at the second one, Fairfax Financials.
Nice.
Founded in 1951, story starts in 1984 when Prem Watsa buys the company. It was a trucking insurance company. Which he bought. He renamed it Fairfax Financial Holdings. Fairfax is short for Fair Friendly Acquisitions.
The softest player in the market.
So he buys an insurance company. He renames it to be about acquisitions. You can see the playbook.
Yeah. Fair and friendly ones, though.
And honestly, they run the Berkshire playbook. So their insurance business is property and casualty and reinsurance, same as Berkshire. And then their investment side is both market investments and acquisitions. The big difference, as I was looking at them, a lot more global than Markel. So the list of Markel investments were basically all American. The list of top holdings in Fairfax's portfolio, all global. So here's the list. Eurobank, which is Greek. Gulf Insurance, which is from Saudi Arabia. Thomas Cook, which is India. Fairfax India, which is India. And Quest Corp, which is India. Here's the thing. They've grown at 18% per year since 1985.
Wow.
So that's getting close to Berkshire's 20% a year.
That is, yeah.
And here's the other thing. They're currently trading on a 9 times price to earnings ratio.
Okay.
Yeah.
Now it's getting interesting.
Yeah. So I just put them head to head to close this episode out. Starting with their price to earnings ratio, Markel 14, Fairfax 9. Share price growth the past 5 years, 119% for Markel, which is about 17% a year.
Yeah.
532% for Fairfax,
and
47% a year.
That's strong. And to contextualize, Berkshire past 5 years is 203.
Okay.
Yeah, so bang in the middle.
Revenue growth the past 5 years, Markel 14% a year, Fairfax only 11% a year. But book value, so the value of their assets, which includes all their investments, Markel has grown at 9% a year. Fairfax has grown at 21% a year.
Fairfax seems like a pretty good deal.
Yeah. And here's one of my big investing gripes here in Australia.
Go Berkshire. Oh, you can't buy it.
Most brokers
Canadian.
don't offer Canadian shares.
Come on, guys. Come on.
Come on, guys.
All right, then to close it, shoot, shag, marry, Berkshire, Markel, Fairfax.
Okay. And you're saying that this is Berkshire with like a post Buffett Berkshire,
as it is today. Like knowing what's going to come.
Well, I mean, you can't marry. You don't marry Berkshire knowing that Buffett's about to leave.
Well,
I guess that's
do.
shag. Like, I'll give Buffett one last throw. One last time with Warren Buffett. And then I guess Fairfax has grown faster. So I guess Fairfax I'm marrying.
Yeah.
And then Markel I'm shooting.
Sorry.
Although the one thing I think, the one key thing about Buffett's playbook has been a belief in American capitalism, which Markel definitely reflects more than Fairfax. But I guess over to you. You asked the question. Now you got to answer it.
So Fairfax seems pretty compelling. It just what I've been thinking about through this whole segment is that is that that theory that we often talk about with experts around just taking the best, and like there's three here who are all trying to do the same thing. Historically, Berkshire's been the one. Like there's a reason these two are trying to copy it.
Yeah.
Can that sustain? I'd be shooting Markel. I'd be shagging Fairfax and marrying Berkshire.
Right.
Yeah.
Well, there you go. I don't think we're going to be making that question a regular segment, but stay tuned.
We're going to take a quick break, and on the other side, we're going to look at how I'm trying to turn $500 into $5,000 by the end of the year. We'll be right back. I'm trying to turn $500 into $5,000. That's right, 10 bag by the end of 2025. That's 23% per month. And Ren, here's how I am going.
Okay.
It's been an interesting month.
Well, why don't you give us a bit of the narrative? So for people who are new to the show, you started strong in February. You were $616
Yep.
on track. In March, you were $760.
Yeah.
Like you were growing. And then I think that's where the story left off.
Sorry, that's where the story. So 760 was what I needed by March. I was 720 or 702 or whatever it was. 702 by March. So yeah, I need to be doing 23% a month. Now, at the last time I did the update, I was all cash because I'd been stopped out after the craziness of Liberation Day. Trying to time the NASDAQ and the like. So I was back to square one, looking for some ideas. Within the first week, we had interviewed Luke Larrative. We actually interviewed Ben from Seneca Financial, and there were two stock picks that I guess piqued my attention. One was AQN, Aquarian, which is it's a company that provides services to the mining industry. Mm-hmm. And then there was also Botanics. It was a pharmaceutical company, I think.
Yep.
So those two piqued my interest. But then I thought, hang on, there's another guy who I think might have a few ideas up his sleeve, Henry Jennings.
Yeah.
I shot him a note and said, I'm trying to do this. He responded saying, it's impossible.
Okay, yeah. Well, that's good.
Let me have a think about it. And then came back and said, you've just got to be playing in the gold space because you need a small Aussie gold miner that is essentially just going to have some sort of acquisition target or some sort of news that comes out and doubles it overnight, and then you've got to do that multiple times. So that was of no help because he didn't actually provide any tickers.
Yeah, it sounds like he provided you some good advice. It's impossible
to do. And to be fair, I did start with AZY, and I should have just stayed in that. So then I thought, you know what, I'm going to back in one of Luke's again, and this came through good research. And I also went in on Bitcoin. So I did 50-50. I went AQN.
Okay.
And I went Bitcoin. And this was on 24th of April.
Okay, so Bitcoin's run.
Well, it's run. It has run. It has run. But I got in as it started to run.
Which is a good time generally to get into something.
Good time, because I'm really facing a moment here.
Oh no, you didn't get in when it started to run. I'm just having a look. It was already in the 90s then.
So for the month, I think Bitcoin's up about 30% or thereabouts. Correct me if I'm wrong if you've got the chart there.
Yeah. Look, from it got into like the mid 70s. From there, it's up almost 40%. But that was early April.
Yeah. So I sat on cash far too long this month trying to chase this 23%. So just to give some exact numbers here, unfortunately, Aquarian, I'm down 4.35%.
Watch Bryce turn $500 into $50.
So that's not good. Bitcoin, I'm up 11.47%.
Okay.
So that's good news.
Yes.
It's not the 23% that I'm after. But at the time of recording, I'm at $730.
Oh my God. And so where do you need to be by the end of May?
Why, I knew you'd ask this question.
Oh, yeah, that's what this segment is.
At the end of May, to be on track, I need to be at 1,155.
And you're at 730.
So I'm really starting to feel the pressure.
Okay. This is when mistakes get made.
This is where mistakes get made. This is where mistakes get made. So
What are you going to do?
I'm kind of tempted to actually just go all in on Bitcoin.
I saw some article that traders are now talking about a $200,000 Bitcoin price.
Really? US?
Yeah, US.
Really?
Yeah.
Yeah, look,
It was just some random article.
I know, it's bullshit. But I'm thinking of going either all in on Bitcoin. You can buy these ETFs again that are like
I was going to
leveraged
say,
long.
because the rules of this game are you can trade anything that we can all buy.
Yeah.
And
yeah.
given we can all access the US
The
market
leveraged, yeah.
through most brokers these days,
Yeah.
you could do a 3 times Bitcoin ETF.
Yeah.
But you might blow yourself up.
Well, I'll put a stop on if that's the case.
It could gap down.
Definitely could gap down.
Yeah.
The thing I like about it is I can trade these over the weekend. Oh, well, not the
No,
ETFs,
you can't
not
do
the
the
ETFs,
ETFs,
but I can trade the Bitcoin over the weekends because the US markets I can't set myself properly. You know
This
what I mean?
is just like all the worst investing behavior in the
I know.
world. Like trying to be super short term, trying to do super illiquid micro caps. Now you're getting to the point where it's like I like a crypto market.
And you know what's ironic?
Because it's open 24/7.
You know what's ironic is the company that we spoke about in our actual portfolios at the start of the episode has done 30%.
TransMedics.
Yeah.
Yeah.
So if I just do proper long-term stable companies, I'll probably make it. But look, nonetheless, that's where I'm at.
No, you won't make it, but you'll get better long-term results.
Oh, definitely.
Yeah, like
Definitely.
investing in stable, sensible companies, you won't 10 times your money in a year,
No.
but you might 10 times your money in your life.
Yeah, absolutely.
And
I can guarantee that.
What you're doing isn't going to get you.
I can guarantee I'll 10-bag my money by the time I'm dead.
Yeah.
But anyway, look, 500 to 730. I'm just stuck in the 700s at the moment.
Don't worry, you'll be in the 600s before long.
Constantly looking for ideas. The more the more I go through this, the more it becomes clear that even Zip, for example, could have just sat in that, would have been better off.
So maybe you need to change your approach. Maybe
What are
it's
you
like
thinking?
stop asking experts and start trying to trade momentum. Trying to like look at some like depth indicators where there's a heap of buyers and not many sellers, and try and catch some momentum plays that way.
Yeah, I do have a screener set up for that. It's then just you still then just have to have you have to choose 1 out of 20 that it spits out. And I guess I need to learn more about then refining those 20 into which is the best of those.
Who would have thought that trying to 10 bag your money in a year required some level of learning?
So maybe I will get in touch with a momentum trader.
Okay, you're really trying to leverage the expertise of others rather than...
Well, otherwise I've got to sit down, figure it out,
Do the work.
do the work. We're busy here at Equity Mates.
Right. Well,
Let me, I reckon, look, let's, I'm not going to change the goalposts. Of course I'm going to
no, you can't change the goalposts.
I'm going to 10 bag. But my most immediate milestone is getting to the $1,000 mark, because then I've doubled. Then I'm like, all right, I'm happy with that, which in the grand scheme of how the year's panning out, I think would be a good result. And then if we can double, you can double again.
Yeah. And then you double again, and then you're basically there.
So by end of May, although we're almost midway through it, I need 1,150. So, yeah.
All right, well, we're going to let Bryce ponder that and call it a day here. We've spoken about some long-term compounders that are growing. We've spoken about some quick wins that perhaps aren't always there for Bryce, and we've covered the news of the day. So we've really covered the full gamut of
Triple leveraged Bitcoin.
of ways to invest. If you've enjoyed it, if you want to keep learning, if you want to follow Bryce's quixotic journey to 10 times his money, make sure you subscribe wherever you're listening or watching. If you want more content from us, make sure you subscribe to our daily news email where we share a short, sharp summary of the news moving market. And if you're on TikTok, give us a follow over there as well. But Bryce, that'll do us for today.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.